This video is for informational purposes only and should not be considered financial advice. Always do your own research or consult with a financial advisor before making any investment decisions. Welcome back to Smart Market Watch. In today's video, we're covering the latest stock activity from Qualcomm, one of the leading players in mobile technology and AI. We'll look at the highs, the lows, the key trends from the last 7 days, and how Qualcomm compares to its competitors. Stick around to the end, where we'll discuss whether you should buy, sell, or hold your Qualcomm shares. First, a little background on Qualcomm. Known primarily for its dominance in mobile technology, Qualcomm designs the Snapdragon processors that power many of the world's smartphones. But its influence doesn't stop there. Qualcomm is also at the forefront of 5G technology, AI in mobile devices, and automotive innovations, particularly in autonomous driving. Qualcomm kicked off the week with some positive momentum. On Monday, the stock rose to $160, largely driven by reports that several leading smartphone manufacturers, including Samsung and Xiaomi, plan to continue using Qualcomm's Snapdragon processors in their upcoming devices. The Snapdragon processor has been a staple in Android devices for years, and its reputation for performance and efficiency continues to drive demand. Additionally, Qualcomm's AI-related innovations are gaining attention, especially its push into AI for edge computing and autonomous driving. As AI becomes more embedded in mobile and automotive technologies, Qualcomm is positioning itself as a leader in the space. This news caused a spike in investor optimism, with shares reaching $166 by midweek. However, not everything was positive this week. Qualcomm faced some market challenges, particularly as concerns over global chip supply shortages continued to weigh on the semiconductor sector. The ongoing shortages have raised questions about Qualcomm's ability to meet the increasing demand for its products, particularly with 5G rollout ramping up globally. Qualcomm's stock dipped to $163 before bouncing back to finish the week strong at $167. There are broader market concerns over tech stocks, especially those tied to the semiconductor supply chain. Investors are cautiously optimistic, but there are clear risks related to supply constraints and competition from other chipmakers like MediaTek. When it comes to trends, the most important factor driving Qualcomm's growth is the increasing demand for 5G technology. As 5G networks expand globally, Qualcomm is expected to benefit significantly from the sale of its 5G-enabled chips. Analysts predict that 5G will not only drive smartphone sales, but also impact areas like Internet of Things, IoT devices, and autonomous vehicles. Qualcomm's foray into automotive AI is also noteworthy. Its Snapdragon Ride platform, designed for autonomous driving, has been gaining traction with automakers. The company's ability to combine its expertise in mobile chips with AI and automotive technology puts it in a strong position as the automotive industry increasingly integrates AI for autonomous driving and vehicle connectivity. This week, Qualcomm outperformed some of its competitors in the mobile chip market, including MediaTek and Intel. MediaTek, while making gains in the smartphone market, has not yet reached the same level of recognition or demand as Qualcomm, particularly in premium devices. Intel, on the other hand, is still working to catch up in the mobile chip market, where Qualcomm remains dominant. However, it's important to note that the chip supply shortages could level the playing field, as all chip makers are struggling to meet demand. Now for the big question. Should you buy, sell, or hold Qualcomm stock? For long-term investors, Qualcomm remains a solid buy. Its dominance in mobile chips, particularly with the rollout of 5G, gives it a strong growth trajectory. Additionally, its expansion into AI and autonomous driving further diversifies its revenue streams, making it a well-rounded tech company. That said, short-term investors might want to be cautious. The semiconductor supply shortages and the potential for market volatility in the tech sector could lead to short-term dips. For those already invested, holding through the fluctuations might be the best approach, as Qualcomm's long-term outlook remains positive. In summary, Qualcomm's position in 5G, AI, and mobile technology makes it a stock to watch for the future. However, like any investment, it comes with risks, especially in the current market environment. Thanks for tuning in to our Qualcomm stock update. Don't forget to like this video and subscribe for more stock market insights and analysis. We'll see you next time on Smart Market Watch.